Good evening, folks. This is Joe Baker. Going to go over today's market structure action as well as a bigger picture that I'm seeing on the S&P, and I'll give you some Dow cash index numbers because I know you all out there do trade stocks and watch the Dow cash index. Again, most of the videos I've been doing lately have been based off of our daily balance chart, which again allows us to see the market for what it is and not what we think it is. As you know, our emotions cause 100% of all our actions. So when we trade our beliefs or our emotions, we tend to almost wish the market in the direction of any trade that we're in. So what this tries to do is put us in the proper perspective of what the market's telling us. We always want the market to talk to us. I know that sounds weird, but sometimes, even in my trades, as long as I've been doing this, sometimes I'll just sit back and I'll just say, talk to me. What are you trying to tell me? All right. Are you continuing to make lower lows? And I kind of go over this sometimes because even I get a little myopic because I am a short-term S&P trader, and with the volatility, you're in, you're out, you're in, you see a 5-point move come in and you think, nice score, got 5-6 points out of that, only for it to fall, another additional 20, which is what happened to me today when I I had to run out and I missed this structure sell here. And not a big deal. As always tomorrow, but I did think the market was going to break down, but it's not what I thought. It's what it actually did. So let's go over what actually happened here. Here's the open range. Okay, I'm trying to move my cursor slow so you can see it, but here's your first hour low. Okay, right at the 82.50, and then here's your first hour high at 997. Now, obviously, the prior day's low was 80, so a break of that. We went down, we tested that area right in here, we bounced right back up. So obviously they defended that area. Now, we couldn't get back up inside this 15-minute range, okay? So the market decided to just pull back down here, okay? Now, it took out this area. So now, again, it's made a series of lower lows. Pulls back up, couldn't get back up inside the first hour low. So it comes back down and takes out this area, pulls back up again, breaks down again. Again, continuing to make lower lows. Comes all the way back up, and this is that area. It's 976 area where it had come down, came back up, came back down to the 965. And this is I'm kind of giving you this structure so you can understand, where the structure break came in and why it happened and why this sell-off came in. So at 965, we had held here, here, and here, bounced back up all the way up to the 976 area, which was this prior swing high. Again, we failed to take it out, so if they can't push it up, guys, they always push it down. So we come back down. Now, this is where it gets interesting, all right? The structure of this, we rode along the 65 area. We came back up here to this prior swing high at 76. We came back down, and you notice what happened. You have this kind of ABC or 1, 2, 3 break. This is what we call a structure break. This is what I like to look for, for good big moves, because what you've done is you've taken out everybody. You keep making lower lows, and you take out another group of traders thinking that this market was going to head back up, most likely to 82, which would be the first hour low. But it failed to do it, and it failed on this candle here. It couldn't even get over the 76 area, so it pulls right back down, takes it out, goes back down to 50, bounces all the way back up to the 65, only to give it right back up into the close at the 50 area. You see this little drain right here, and then it comes right back up, and here we are now. So at any rate, we close at the 57 area, and I just wanted to kind of show you the structure of the day and how important that first hour high is, that 15-minute range, and are we continuing to make lower lows, and are we taking out the prior swing highs. I'm going to pause it for a moment, and I'm going to go over something that I'm seeing on a bigger picture in the S&P. Just hold 1 second. Okay, this is the S&P, and hopefully we won't get any more price destruction, but this could be, and I say could be, all right, and I'm going to give you some targets and some levels here. This could be a inverse head and shoulders to the upside. And I was looking at this level here for resistance. Okay, let me draw this line right here so you can see it. Right on here. You see how we made these equal highs, guys? Look at right here, right here, right here, right here, at this 10,007, 10,008 area. Okay, or I should say 1,007, 1,008, not 10,000. If we pull back and we hold the 912 area, okay, the 912 area, which will be right in here, and we start to head back up, all right, this would be a nice inverse head and shoulders to the upside. Now again, if we hold this area and we've got the 1,007 to contend with again, so not only is it holding this area, but it's taking out this area, and we'll get a nice rally up to about probably the 1070 area, 1100 possible. If we take out the 912, it doesn't look good. We would come back down, we would retest these lows, and there's a possible target of 750. I'm giving you two scenarios here. This 912.50 area is key, okay? And that's on the S&P. Now let's jump over. I'll just tell you the numbers. I don't have to switch screens. It's going to be about the 88.90 level to 87.50 level. That's on the Dow cash. So 88.90 to 87.50 area. Okay, Dow cash it's not such a clean pattern, so I have to kind of give it some room. So again, right around the 8,800 level, this has to hold on the Dow cash if it's going to get that move upward. And then we have to take out on Dow cash, which I'll update you anyway, but I'll just let you know what it is. On Dow cash, it has to take out 96.50. Okay, folks? So we got kind of two scenarios playing out here, and we are in what I would consider no man's land, because we've only got another 30 points to the downside. That takes out its adios, kind of all over here. And then if it holds, then we can come back up, and we may be in this range between 912 and 1,000. Okay, and that may be a scenarios too, but I'll keep you updated. Again, the levels, we're doing all the levels. I had figured for about 360 points of market movement. I was foolish enough to think that the volatility was diminishing and that I could pull the market in a little bit and get a little bit tighter. Foolish me, because I've been putting wide targets on, and I brought them in last night. And sure than heck, the minute I brought them in, bam, okay, 500-point day. So I do apologize for not putting out the extensions. I will try to do that in the future, just in case. My fault. I put 360 points in. Who knew we were going to get 500? So I missed it by about 150 points there on the full extension ranges for you guys. So I do apologize. But at any rate, you can go over to the blog. Okay, it's where my bio is underneath. I say this to you all the time. Please, if you ever feel like you want to come in and see how we intraday trade, by all means, guys, stop right into the room. Just send me an email. I'll kick you right over a passcode. You can come in for a week, maybe a week or two if you like. Check it out. See how we trade the markets. It's an incredible education room. You are not going to get this type of education anywhere. I encourage you to come in and try it out for free. Again, you just send me an email, and I'll send you the passcodes. Just stop right in. Come and go as you please. And again, you can sign up for the nightly levels. All right, guys, be careful. We are in no man's land, and I'll be continuing. Workloads lightening up, so I'll be continuing to do these nightly updates for here on out. Take care, guys, and trade safe.